Okay guys, so daily scalping profit targets and limits. Okay, so what we're trying to do here is we're trying to say to ourselves, right, we have a profit target or something we want to achieve as scalpers, and I'm definitely not a fan of saying, oh yeah, I've got to make 2 grand today. Tried that, it's very difficult, and even if you go and read some of the trading books, I've got one nearby, I know it's over on my other desk. No. If you look at it and you see, I think it was in Pitbull, or it might be in Pit to PT, one of the ex-Pit guys, he had a great story. He's like, he was trying to make, I don't know what it was, 20 grand to buy his wife, I think it was a fur coat. I'm probably butchering the story, but I'm sure I remember it being that kind of number. Anyway, he went into the pit and it was like, oh yeah, 15 grand, 16 grand. Went back in just to make a last little bit of money, and of course he lost it all. And we've probably been there ourselves. I know I've been there. I've not been buying 20 grand fur coats, but we've been there where we've tried to make a certain amount of money per day, and we've pushed it too hard and it's ended up hurting us. So I'm not a big fan of that. However, doing something like this makes sense to structure your day, to strive and get the best you can out of the day when it's right, but also, most importantly, when things aren't working, to get out of there. First thing is number of net pips / ticks. So in other words, what you can say to yourself is, right, I'm looking to get 20 pips out of the market today, 30 pips out of the market today. And whilst that is obviously monetary because it's compared to your position size, what it allows you to do is it allows you to say, and especially if you're doing it very structured, you're saying, okay, well, the average range is X. Most of the time we're getting these rotations of X. So if I can get on, let's say, 3 rotations out of the 10 I expect in the day, then that's what I'm looking for. And so you can then scale it back and say, well, those 3 rotations might be 10 pips each. There's going to be 30 pips in the day. So that's my target. So that's something you can do. Say, okay, well, I want to try and get 30 pips out of the market. And that's got to be, and the most important thing to say here, guys, it's not just you're picking out and saying, oh, you know what, I must get that out of the market. It's, okay, the market is moving in this amount, so if I'm scalping, a small chunk of that will be X. Is that feasible? Yes, it is. That's the key part of it. The second thing is screen time in hours. Unusual one, but this works quite well. So you can say to yourself, okay, especially if you're scalping and you're trying to kind of keep control of your energy, is say, listen, the trading day might be 12 hours. Let's say if you're in Europe, for example, maybe it's actually longer than that, it's like 13 hours, because 8 o'clock in the morning to 9 o'clock at night if you're trading the European and US session. But whatever it may be, maybe it's just 5 hours for you, doesn't matter. The point is you say, okay, well, I'm going to scalp, or I'm going to be in the market or available to trade for 3 of those hours. So I'm going to pick when they are. So I'm going to stick at the screen time, hour in the morning, hour at the close, hour at lunchtime or after lunch, or whatever it may be. So this is a different twist on things, but what it does is it keeps you away from the screen during the times you don't want to be there, and we talked about that in the prior video. But what it also does is it allows you to say, well, there's no rush for me to trade now because I've got the afternoon session coming up. I don't need to dig myself a big hole. I can trade because I've got 3 distinct segments to trade. And so, yes, I'm going to make sure that I'm actually trading during that. And if the volatility is there, it means that I'm going to be able to capture it, assuming that your scalping skills are up to standard. All right, number 3 is the max loss in pounds, dollars, euros, a yen, whatever you're trading in. This is pretty self-explanatory, but you know, we've all broken our loss limits at some point when we're scalpers, because we get caught up in it. We're kind of trading. Most of the time, this is what happens. We're trying to get on the end of a move. Okay, let's say it's a kind of push to the highs. We get on it, it fails, and we kind of scratch it. It works a little bit, we scratch it, and we keep scratching or losing a little bit. Then it goes, and we get on it, and we get frustrated, and we kind of trade something else, and the frustration allows us to lose more than we can. So always having that max loss in our mind, especially when we're scalping for the day. Number 4 is max lose in the row. This is super important, guys. If you don't do any of this, this will stop you digging a big hole, because like we alluded to probably 5, 6, 7, 8 videos back, the biggest danger for a scalper is the mindset and let the emotions get in too high or too low. Too low especially, so you've lost. What you don't want to do, you're at that danger point, guys. If you had, for me it was 3 losers in a row. 1, 2, 3. At that point, my trading would just go to pot. I'd just be the worst possible trader. You could have faded me with all your net worth and you would have made a fortune. For some reason, 3 trades would trigger. And actually even now, when I kind of, whatever time frame I'm trading, if I find, for whatever reason, 3 that are not so great, I need to be careful that I'm not getting too, oh, 3's annoying, let me get one back, whether that is day trading specifically, whether it is scalping, or even if that is holding something a bit longer. So find your max losers that you think, that starts to make you trade differently. So 3 might be okay. I take a break after 3. Won't trade it. If I have 3 losers in a row, I stop either for the day, or you can say to yourself, there's 3. This is a little trick, guys. If you find yourself not being able to stop and think, I just want to take the 4th trade, then you can allow yourself this. You can say, okay, if I have 3 losers in a row, I have to go away and come back and I'm allowed 1 more trade. If that's a winning trade, I can take another one. If that's a winning trade, I can take another one. I'm not allowed any losers. If the 4th is a loser, then I'm out. If the 5th is a loser, then I'm out. So you're giving yourself one last lifeline. So the point is, when you have those 3 losers, in one kind of person in your ear saying, just keep trading, there's going to be a great strategy coming up. You can't stop now. The market's just getting going. You've made a bit of a mistake. You get it back, no problem. The other one's saying, you're digging a hole. Do not dig a hole. You've at your max loss, get out. And if you struggle with that, which we all do with discipline from time to time, try that. Say, okay, I allow myself 1 more trade, but I must have a break, because you must recenter yourself, refocus, and say, okay, I'm going to trade in the last hour, whatever it is, and I'll allow myself one more loser. So you can have money winners as you like, and very often you'll recover the day from that. Example, you'd be sitting there and you're trading. This was recently actually for me, sitting there, you're trading and you kind of trade the open a little bit, you're doing okay, you're making a bit, and you have 3 losers in a row, and you can feel, oh, I really didn't get on the end of that very well, and I've kind of drawn down quite a lot. I'm still kind of just about in green, but I feel like I've ruined the day. Clear your head, go back, come back again, fresh, and you can recover the day, make it into a fantastic day. Whereas if you'd stayed there and constantly tried to get on the same thing, which often we do as scalpers, the same strategy, the same setup, the same kind of hypothesis, and you're wrong, then you can end up digging a huge hole for yourself, guys. So max losers in a row is good. Max winners in a row is another good one. So just flip it on its head and say, okay, if you have 5 winners in a row, you call it a day. Or you have an adjustment, like I said, with the losers. So you say, okay, once I've had 5 winners in a row, I can trade again, but as soon as I have 1 loser, I stop. So you're kind of giving yourself that kind of trading stop, if you like. So once you've had 5 winners, you go, right, okay, I've had 5 winners. I know that I'm vulnerable now. And this is going to depend. Obviously, you don't stifle your ability. If you're in tune with it, then press it. But if you know that after 5 winners, you start to get a little bit blasé and start throwing money around willy-nilly, you need to say, well, actually, okay, 1 more loser and I'm out, and I'm going to bank that. And if you kind of know your risk reward ratio, you know you're banking, oh well, I'm banking £800, I'm banking 2,000, I'm banking 100, whatever it may be, so I feel comfortable with that, and so you can be more relaxed. The final thing is similar to that, but a percentage off high water mark. So you can say, well, I'm only going to draw down 10%, or I'm going to have a trailing stop. Let's say £500 is your risk for the day, $500 is your risk for the day as the scalper. As you start to make money, that 500 just comes up. So let's say you make a few trades and you're up £1,000. Now you can only draw down 500 and you're still going to make 500. If you've made 500, you can only draw down 500 and go to 0. If you've made 5 grand, you can only draw down 500 to go to 4.5. So you're constantly moving that up. And if you ever start from 0 and go to the minus 500, then your risk is capped and you've lost that £500 for the day. And that number is going to be what's relative to you and what your max loss is for the day. So these daily scalping profit targets and limits are super important to have, guys, because as I alluded to earlier, the number 1 danger of scalping is getting too emotional, getting caught up in it and digging a huge hole for yourself that takes you absolutely ages to get out. Not only damages your account, but damages your mental kind of confidence as well.